In less than 10 minutes, I will explain the secrets of the financial system. Takes your money without you knowing, and you'll know why the crises are caused. But first, we have to understand what the social economy is. The money that you have, we classify into parts: the saved money and the transit money. This is your income and what you spend. Looking to society from afar, there is also money in transit. The saved money, few with the small pockets, others with the big pockets of money, but many others in debt. All that money is a real money, and we're going to call it monetary flow. The money in society is there. The good economy or bad economy is defined by the flow of money in circulation. Good jobs with good income and the power to spend. Or that bridge called money that is formed between buying and selling. The power of monetary transactions or good economy would generate good tax, resulting in a healthy country. This is the goal for any country in the world. To have a good jobs, you have money, buy whatever you want, and the country has money, but with a very low taxes. This is a good economy. Capitalist countries and many others, they have a top system that influences in the economy of each country. This is the financial system. This means there are a line of very particular businesses. They are not like any other business that exists in the country or in the world. In these systems, there are financial agencies, big banks, small banks, micro banks, credit unions, and even personal lenders or loan sharks, or suitors as we know in the past. The financial system created in history virtually divides into two parts to a nation. First, all financial line is creating a secret pocket in the country's economy, and the other team, the rest of the society. Any other business, whatever it is, creates a product or service to exchange for money, building a healthy economy. Any person or company that profits will save and spend or invest it in the near future or in 100 years. That is the goal of money, to spend and get whatever you like. With the financial fellows, their product or services is money. In exchange for money, make money and ask for more money to society, more for what they can offer to society. This affects the total economy, quietly, discreet, and destructively manner. Is an economic trap. The destructive tool are monetary interest, or how to get money by lending money. This is a simple equation to understand in the whole world. If I lend you $1, then you have to pay me $2. If I give you two, you have to pay me four. If I give you more amount of money, you will stay in debt. When monetary interest is applied to the society, it divides the money in two different types. The free circulation money, which any business in the world is using since the beginning of times, and the financial money, which they retain until someone is in debt. This financial money is not in circulation, such as the customers, employees, or taxes, etc. This is a pure profit from money interest. Money interest will always be greater than any money. The money in society flows freely from person to person and company to company, which does not happen with the money from the financial line. This would rest on the institution's coffers of their owners until society requires. It comes as good money offered to solve needs, make whim, investing in business, or shorthand for society. It is a perfect bubble for social progress. In 10, 15, 20 years or more, must return the money to its owners, plus monetary interest agreed to pay. What remains is an empty of money in circulation there wasn't before. Society falls on the need to ask again and again to cover the short of money caused by monetary interest. The gain has one way to their way and is not for society. Down the hill, directly to the economic crisis, because money interest. And no matter how small is the interest on debt, money absorption is for sure, and free circulation of money will disappear. When the financial line makes its loans, money in society increases, straining the economy. But it is no more than a temporary monetary bubble, which gradually weakens while collecting their debts, as domino effect, affects their neighbors, which already have their financial owners. Tourism and foreign investments are tools of the monetary suction of their favor, because it's not money that will flow free and permanent, will begin to disappear from the moment the interests are charged and is considered as the income of the lender. It is a slow process, safe, progressive, but destructive to society. This economic phenomenon, absorbing the money, works the same against people, cities, countries, and even the whole world. We all lose economically against the financial line. It's a negative law. I have good news and bad news. After the World War II, the greatest geniuses in the economy to upset the total absorption of free money circulation choose the usefulness, like magic, of fiat money, or money created based on trust borrower's payment, which will get the real value to be the equivalent to the work done by the debtor. What? This is money like money laundering, but legal. Is introduced into circulation, energizes the economy, gives happiness to many, but it still ends up in the coffers of the financial line. Second phenomenon of monetary interest. Who is affected and how? All economically active population are affected, some direct and others indirectly. High class, they stay away from financial loans. They know how to do their business and banking risk, but they don't sell on recession time. On the other side, less fortunate population don't have much income or are dependent of social programs, no banking relationship. They are unemployed. In the middle of the population, they are the most vulnerable, who are affected directly and making legally money for the benefits of the financial line. The working population, which has a financial tie, loses their economic stability, result of the broken system that handles all the capitalist countries. The good payees or responsible people are tools of absorbing the free money in circulation. If you know someone who had bad economy, he lost the business of his life, is surrounded by debts, lost his job, no money to cure disease, declaring bankruptcy, the home is in foreclosure, lost his car, or do not finish college, is because the bad economy. He is here included. That simple equation to give money and receive more has become the biggest trap that man has put on his path, a silly progress. Put money and take money. Put the floor and remove economic floor has become the negative lottery for the most vulnerable people. Losing homes, cars, businesses, and so on are normal routine. Already it affects everyone. And the economic effects fell in large proportion as Los Angeles and Puerto Rico they felt, Greece as a country, and Great Britain with Brexit wants to solve. How to pay a debt to the system when the system causes the debt.